Bernstein has downgraded Kraft Heinz, the company, from outperform to market perform, citing the lack of a clear catalyst to drive the stock higher in the near term. The North American food giant is down about 20% in the past year and will report quarterly earnings next week. For more on the downgrade of Kraft Heinz, let's go to Alexia Howard, Senior Research Analyst, U.S. Food at Bernstein. Thanks for joining us today.
Happy to be here.
Can you explain what you mean by a catalyst? You said there's not really an existing one for Heinz. What would be a catalyst as an example?
For example, if we saw the takeaway data, so if consumers were buying more of the products and we saw that in the scanner data that we get from the retail channels, that would be something that I think could draw people's attention and get the stock moving upward again. The problem is that we've got four key brands, Lunchables, Capri Sun, Mac and Cheese on the Kraft side, and Oscar Mayer, that are all under pressure at the moment. And they've been struggling with market share losses and price competition with private label products from the retailers. So there's nothing on the horizon that we think could really hook investors back into the name at this point.
Let's talk a little bit more about that, because they are very recognizable names. People know their products. You say they've been losing to private labels. Is it more than price here?
I think it's a little more. In some cases, you've got other brands coming into the market. So, for example, if we think about Kraft Mac and Cheese, there's a new brand called Goodles that's got very clean label, very simple ingredients, and better for you in terms of the nutrition label. And they're doing spicier flavors. So they're really hitting all the things that Gen Z and younger people like to focus on. And unfortunately, Kraft Heinz has been a little bit on the back foot as regards innovation and so on. And so it's private label in things like cold cuts, Oscar Mayer, that's where the price competition is really playing out. But it's also losing share to these smaller challenger brands with cleaner label ingredients that the consumers really want.
Okay, you mentioned that they've been slow to innovate. What kind of innovations are you seeing in the sector that maybe Kraft Heinz could pick up on?
I think there's been some good movements over the last 10, 15 years in the direction of simplifying ingredient lists. Goodness knows we're getting a lot more regulations on that front right now, but also getting into spicier flavors. Certainly the whole hot sauce phenomenon has really been a direction that people have been hanging their hat on. And then, of course, the all-important health and wellness trends. We've got a marked increase in consumer interest in longevity as a result of books like Dr. Peter Attia's Outlive book and Good Energy more recently, but also with the GLP-1 injectable weight loss drugs like Ozempic and Wegovy, we've also got another massive growth area with patients that are looking for very specific portion control and things that really cater to their protein needs and so on. So there's a number of things that the companies could be doing, but cleaning up the ingredient lists and really heading in the direction of health and wellness, I think, is one of the key themes here.
Okay, talk to me about tariff exposure. Are they affected at all by what's going on with the trade wars?
To be honest, for Kraft Heinz, they're a pretty domestic company, and most food supply chains are fairly locally focused. So, most food systems they build themselves up based on locally sourced ingredients. We here in the US have a lot of grain-based products, including the dairy and meat industries, which Kraft obviously plays into as well. So no, the tariffs shouldn't be too much of an issue here.
Okay, so they are coming out with the results, quarterly results next week. What are you going to be looking for?
I think any real news on things starting to move in the right direction for some of these brands. So if they can talk about innovation, if they can talk about private label pricing dynamics maybe improving, that would certainly be a bit more positive. Also, just the broader trends on the consumer sentiment. What we're hearing is that consumers are getting more cautious, more anxious as time plays out. That, on the one hand, can actually benefit packaged food because you tend to see a trade in from restaurants to people eating more food at home. But also, at the same time, it tends to push people into trading down to cheaper private label products at the same time.
So, Alexia, apparently Kraft Heinz is known as Warren Buffett's one of his favorite stocks. Do you see that changing?
For Warren Buffett, that's hard to tell. He's been in the stock for quite a number of years now. Was obviously part of the whole merging of Kraft and Heinz and all the 3G story that played out about a decade ago. Don't see it on the horizon that he would be stepping aside or pulling out at this point. Some investors have brought that up as a question, but it doesn't seem that certainly there doesn't seem to be any major issue with the cash flows of the company or the dividend at this point. But certainly at this point, it's also hard to see anything that's going to really knock it back up into markedly positive territory.
Got it. Alexia Howard is a senior research analyst, U.S. Food at Bernstein. Alexia, thank you for your time. Appreciate it.